In the second half of 2020, Shophouse transactions in Singapore came up to about $640 million. Barely 6 months later, in the first half of 2021, sales rose to around $860 million.
For the past several years, a lot of investors have witnessed for themselves the capital appreciation of shophouses. For investors who have hold on to the properties for more than 10 years or 15 years, they have seen increase in prices 300% or 400%.
Why has interest spiked for these heritage buildings in the pandemic? And will this trend continue? But first, what is a shophouse? Its decor and style has evolved over the years, but the architecture remains unchanged. The URA defines it as a narrow, small terraced house, 2 or 3 stories high, with a sheltered 5-foot walkway up front. No two shophouses are the same, and with only 6,500 of them conserved in Singapore, scarcity is pushing up prices and demand.
Towards the end of 2020, we saw a surge in demand for shophouses. We have seen prices trended up, some as high as 20-30%, and in the very core areas have gone up more than 50%.
Average transactions in the first half of 2021 were at $4,425 per square foot, 16.3% more than the whole of last year. One shophouse at 13 An Siang Road fetched $9.3 million, a 9.2% yield after being held for just less than a year. And recent transactions are seeing even better returns, with more shophouses being put up for sale.
Why do people continue to look at shophouses? These are special assets whereby the owners can repurpose or redesign the internal part of the building for their own use. They can even rent it out to multiple tenants, turning the upper floor to co-living space or co-working space as well.
Co-living providers offer a variety of properties, but Figment focuses only on shophouses. Each shophouse is refurbished and redesigned into new residential spaces before opening up for lease.
Singaporeans really like living in shophouses because it is part of our national heritage. Kampung spirit, a very, very big thing for all our grandparents and parents growing up. You actually get to experience that along with a sense of place and nostalgia when you're living in a shophouse.
A shorter lock-in period of 3 months with furnishing, Wi-Fi, and utilities is a plus for renters too. And locations with mixed-use shophouses provide access to many services.
What we call the 15-minute kampong, the notion that you can wake up, live, and walk around in a 15-minute radius, all the amenities that you could possibly need. It could be a bakery, it could be a co-working space 2 blocks away, it could be yoga or a gym studio.
With over 39 companies vying for a piece of the co-living space, the market is getting increasingly competitive.
So homeowners also care a fair amount about the returns that they get from their shophouses. And that's where I think Figment can really come in. Because by basically signing a longer lease over a 5 to 7 year period, we're able to secure a certain rental. And beyond that, we are also able to then reduce the vacancies that they would normally get on a 2-year basis, while also pushing up the rental yields that they can actually enjoy for their property.
Residential yields are about 3% yearly, while returns for commercial and industrial assets bring in about 4.5% and 6% respectively. But with nightlife disrupted by the pandemic, the previously stable yields for shophouses are under threat.
Shophouse owner, unless they quickly translate to co-living, they're going to find it very hard to continue to hold on to that because the yields are under attack. Where they used to have, karaoke, bars and so on. Now, because the rentals are not there, they have to migrate to coffee houses, to more niche player.
This in turn has benefited the co-living market.
I'm looking at keeping this property for 10, 20, 30 years, look at the capital appreciation, but in the meantime, find somebody who can keep it occupied, take good care of it. So with Figment, I don't have to worry because their asking rental may be lower, but as they succeed, the asking rental goes higher. And their occupancy is quite good, 90%. So when you put everything back, it's a much better deal renting it than managing it myself.
So what's next? More foreign buyers, family offices, and funds are drawn to shophouses for their character and heritage values, but also their lack of an additional buyer's stamp duties fee. In a post-pandemic world, residential assets are likely to be more resilient than retail or office spaces. This means more room for co-living spaces to thrive. Demand for shophouses continues to grow. Sales value for 2021 is projected to go beyond the previous high of $1.46 billion in 2018, with over 200 units changing hands.